Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, April 17th, 2017, and this is the Daily Report for Gold and Silver. A double shot of Trump chaos and Fed minutes has resulted in a flight to safe haven assets. As such, today we saw a virtual meltdown in U.S. equities, and we saw gold and silver getting bid up substantially. Gold trading up about $10.80, closing at $12.93. If you recall from yesterday, we initiated a long position roughly at $12.83. So we've got about $10 on that trade. We'll talk about it in detail as we pull up some technical studies. Silver closing up about 8 cents, which is pretty good considering it was actually trading under pressure for the better part of the trading day. Now to the big news, triple-digit meltdown in U.S. equities. Dow Jones Industrial Average plunging through 22,000, losing 274 points, closing at 21,750. NASDAQ also tremendous downside action, losing 121 points at 62.23 and 24.30, down 38 in the Standard & Poor's 500. Traders, although it's unusual for us to exit a trade and then to initiate our next trade the following day, that is exactly what we are involved in this week, as we issued a buy signal yesterday to enter the market, and this occurred immediately following release of the Federal Reserve's FOMC minutes from last month. We entered the market at 1283.70. We currently have the market at 1294.50, so we've got about a $10 gain on this trade, a small gain on the last trade of about $8, and the one just preceding that, I believe, a little bit over $30. So we certainly have been on a roll over the last couple of months. Now, what I find interesting in this current action, in which they are strongly bidding gold back up again, we're looking at a half-a-day chart, is that we're once again within striking distance of that elusive 1,300 per ounce. My sense is that the current environment and events that have recently transpired are enough to give gold prices the momentum that will propel it not only past 1,300, but as I said on numerous shows, my target is between 1,317 and 1,321. So traders, what began as significant pressure and a failure to take out $1,300 per ounce on Monday of this week, which was followed by another down day, this being Tuesday here, the last two trading days have brought us pretty much back to the point before the decline on Monday. And traders, most interesting is the way the candlesticks are developing when we convert our daily into a weekly. What is real interesting is you can see this exaggerated low. This is roughly at 1272. We still have one trading day left in the week, and it is highly plausible that we will actually get a green candle by the conclusion of Friday's trading and have a significant price increase above 1,300 per ounce. So traders, my recommendation is to maintain our current long position that we put on yesterday at 1283.70. We have put an initial stop just below 1270. The rationale behind that, when we placed the trade on yesterday right in this area, was to be below these most recent lows. I will look to move that stop up rather quickly, and I am looking at right now roughly the area of about 1285. That is a couple of lows that we have here and here. My thinking is as follows. If we see a solid break up and through 1,300, that tells us one thing, and we can loosen the stop or let the market run if it still has some upward momentum. However, if we get the market stalling again, as it has on numerous occasions at 1,300 under pressure, I want to be able to at least protect our equity, if not lock in some profits. However, as it stands now, I truly believe that there is at least a 70% probability we will see this market run and break through 1,300 over the next, say, 3 to 4 trading days. And traders, as I spoke about in our opening letter today, tremendous pressure in the U.S. dollar as well as U.S. equities. U.S. equities absolutely under siege. Dollar trading marginally, fractionally higher today, up about anywhere between 1/10 and 0.2%, 93.59. You can see it represented on this daily chart. However, I do believe we have serious resistance at 94. These highs here, and I do believe that we will continue to see downside pressure, and my target remains 92 on the dollar index. And traders, a tremendous sell-off in U.S. equities, triple digits in the Dow, trading off by 1.25%. Dow Jones Industrial Average currently trading as we go into the close down 274 points at 21,750. The NASDAQ Composite also trading under dramatic pressure. You can see that represented with this spike down, almost 2% on the day, losing about 120 points at 62.26. And then lastly, the S&P, that is not unscathed. You can also see these deep corrective days that have come in, and specifically today's losing about 1.5% in the Standard & Poor's 500. We certainly could be at the beginning of some sort of a real correction, and what I mean by real is 7 to 10% in terms of a decline. We'll have to see how this washes out over the next few trading days. Traders, it is a rare occurrence when we will get out on a trade and then re-enter the market on the next day. Typically, I'm looking to go long the market, so when we are knocked out of the market, when our stop is hit, whether it's in profits or a drawdown, it typically indicates that we've got selling pressure coming in the market. This case was a little different. We exited the trade, but we exited the trade at the level that I believe we would find support. This is a event-driven market, and as events unfolded yesterday, especially the release of the minutes, I really saw the fundamentals shifting in the marketplace, and so we put on a position. Obviously, we're going to maintain that position, but we'll probably look to raise our stops tomorrow. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review, and what a week we've seen. Bye-bye.